Hey, what's going on, guys? Wanted to look at this post I just saw on Reddit a little bit ago. XDTE and QDTE both outperformed their underlyings this year. So they were first introduced to the market on March 7th. So maybe that's why they, outperformed it. It wasn't a full year. But looking at the data here, you can see I believe this is probably just a $10,000 investment, but it pretty much ended up being XDTE 11,427, VOO 11,383, and then for the NASDAQ 11,470 versus 11,450. So, and then pulling up, one of my favorite websites to look at this data. You can see, scrolling down a little bit here. Yeah, so the overall return, 14.28%, 13.83%, 14.73%, and 14.5%. So this is probably including inflation as well. But coming back to this article, look at the comments there. A lot of people are very interested in these funds. This user is using all three of the Roundhill funds. XDTE, which is the S&P 500, he's holding 50%, and he's holding 25% of the NASDAQ 100 one at QDTE, and he's also holding 25% of RDTE, which is the Russell 2000. But yeah, so very interesting data for sure. It'll be interesting to see how they perform in 2025. I imagine it's going to be hard to consistently beat their benchmarks, but it's ultimately just going to determine on the market that we're in. So yeah, and obviously this isn't totally agree, but net of taxes they underperformed, and that's exactly what I was about to say. Yeah, so this is of the assumption of if you didn't have to pay taxes. So if it was like in a tax deferred account, then yeah, you would definitely be ahead. But after taxes, you're gonna have to definitely look at that. And as they were very close in the numbers, after taxes, they're gonna underperform. No doubt in my mind. But with all that being said, let's look at some of the data here. So according to this website, their yield is around 21%. I think it's going to be a little bit higher than that. But for this assumption, we can just kind of use this data and go from there and look at some numbers and see how much it would take to kind of see how much it would take to invest into this fund to make, a certain amount per month. The cool thing about this fund, it also does pay weekly. So that's something a lot of people, really enjoy as well. So let's go ahead and look at some of the data here. So a 20.99% yield, $50.24. That's the current price. And we'll just say 21%. So we're going to roughly get $10.55 per year. And that's where that data came from. So we'll divide that by 12 to give us a rough ballpark number. So we're looking at, we'll just round up to 88 cents. So let's reset this data here. And let's say $50.24. And we are getting 88 cents per month. So in order to make $1,000 per month, or in this instance, it's going to be roughly $250 per week, you're going to have to purchase 1,136 shares of this fund. Zoom in a little bit here so you guys can see that. Get this out of here. And that's going to cost us roughly, roughly $57,000 to do that at the current price. And this is assuming a 20% yield. So I think they'll pay a little more than that, but that's just with the current data we're seeing. The next threshold is $2,500 per month. And that's going to take roughly 2,800 shares, 2,841 to be exact, or an investment of $142,000 and some change there, 142.7. $5,000 per month, $1,250 per week roughly. It's going to take us 5,682 shares, or an investment of $285,000. And then lastly, $10,000 per month, or $2,500 per week. A lot of people could retire on those numbers at 570K, 571 almost. That's how much it would take. Now, do I believe you can, not drip these dividends forever and just live off them? I don't personally think so. 21% is still pretty high. So I think there's going to be some NAV erosion with that, but maybe 50% of that, right? So maybe if you're getting closer to an 11% yield, reinvest 50% of the income and then live off the other 50%. I think that could be a strategy you could, run some numbers on and kind of assess there. But yeah, so let's just kind of check these numbers to see. So 1,136 shares. We're going to roughly try to make $1,000 a month. So if we go look at the dividend history, pull up a calculator. So 1,136 shares times 33 cents is kind of pretty low, but we'll do times 33. Yeah, so actually, if you're looking at 88 cents per week, yeah, so maybe the 88 cents per week is too conservative, and it looks like, the majority of the time they're over 22 cents. I'm not sure the average, but you can see maybe 20% is too low of an assumption there. Maybe they're closer to 30 or 40%. That's something I'll have to go back and do some more research on for sure. But needless to say, though, you have 1,136 shares. It's going to cost us, remember, roughly $57,000. But this past week, if you had that, you're getting paid $381 per week. Remember, this is weekly income. Times that by 4, you're making $1,500 a month. 60 cents seems pretty high to me. I don't know if those were like end of the year distributions. That's why they were higher. Maybe they had some extra cash. They just wanted to distribute over to their users. But 60%, that's pretty massive, right? So what do we say? 1136 times 0.66. That's $688 per week times 4. That's a lot of money monthly. 60% yield, or 60 cents annualized out if they're able to do it every week, times 12 divided by 50, 24. You're looking at a 60% yield. So I don't think they're typically going to be paying out those numbers, but if they did, it would be massive. And there's going to be a lot of NAV erosion for sure. If you're paying out a 60% yield, you're going to have to kind of combat some of that NAV erosion. So just kind of keep that in mind. 15 cents times 4, that's 60 cents times, that's closer to, that's a 14% yield annualized. So the thing about options and covered call funds like this, the data is going to vary a lot. So that's just something you also have to kind of keep in mind for sure there, though. But yeah, interesting article to say the least. They did outperform their underlines before taxes. So after taxes, they're going to underperform, but it looks like, since March, they did pretty well. I would not have expected this close of a race between, these covered call funds and their underlying. We'll see in 2025. This is going to be a big year for them. It's going to be their first full year in the market. Who knows, if it's going to be a sideways market or it's going to be a bear market, how they will perform, going forward. Definitely some funds that are on my radar and I've been keeping an eye on for sure there. But yeah, guys, that's going to be it for today's video. Wanted to look at XDTE. I saw this article and I thought it was very interesting. Disclaimer, do your own research. Make sure, you have the risk tolerance for these types of funds. NAV erosion is pretty common with these types of covered call funds, or really any funds that pay out these massive amounts of yield. it's just coming right from the NAV. So that's just kind of something you have to be well aware of and kind of understand when you take on the risk with investing into these funds. Do your own research. Not a financial advisor here. Use this content for educational purposes only. And as always, guys, if you're still here, I really appreciate it. Please like and subscribe down below for more content coming out in 2025.